In this session, we're session 7. I brought in 2 people that I trusted implicitly, that they, because I've worked with them both probably at least, man, I want to say at least 8 years each. I'm going to say that, and in 8 years, I've never had a reason to go, oh man, why did you do that, right? And so I'll tell you, lenders, let me just talk about why I distrust lenders, and you may have already had some of this happen, is lenders will lie to you to get a client, right? They will get a client and they will and they'll tell you, yeah, they're approved. They'll go through the motions, and then somewhere along the line they'll start telling you, well, we're having a hard time getting them approved. We're going to have to extend closing, and they'll always have some other excuse, like the appraisal isn't in yet, or they haven't given you all the documents. But it really comes down to, they're probably just lying because they didn't have a good approval to begin with. Now they've been working with them behind the scenes to try to get them approved, and they can't. And then you've been spending all this time working with them, with a client, trying to show them houses. You have an offer, you based it on their pre-approval that isn't worth the paper it's written on, and now you're just stuck, and then you have to go and find another lender, and nothing is worse than that. That's really bad. And that's just one example. And then credit repair people, you know, when someone says credit repair, I'm like, oh, be careful, because if you don't trust the person, if you don't know their background and their record, they will take the money and run. And there's a lot of people out there right now signing up with these companies, and they are affiliating themselves with credit repair companies that are, and I'm sure that Harley could talk a little bit more to this, that are saying, you just bring me the clients and we're going to pay you as if it's your credit repair, kind of affiliate program, I guess, in that way. But those people have no idea what they're doing. You have to have some corn in the crib, right? You have to know what you're doing. And the people I brought here tonight, Lindsey and Harley, they both know what they're doing. Now, I am going to open this up here, and I'm going to start with a quick review. And let me see here. If I did this and let me see if I can see. Wanda, can you tell me if you can see my my slides? Can you just shake your head? Yet you can see them. It says Real Estate Simplified. All right. So Real Estate Sales Simplified is very simple. You do you, and they do, and the lender and the title company and the credit repair do them, right? So this is what we should be doing every day. We should be talking to people, setting appointments, writing contracts, closing deals, and asking for referrals. If we're doing anything other than that, then we are not doing our job, right? We need to be doing these things. Now, if you're doing other stuff, that's great, but you can't leave these things out. You should be talking to new people every day, trying to set appointments, trying to get out, write a contract, because that's the only way you make any money. And then once you have a closing, you need to go back and ask for referrals. Now, if you've ever referred somebody to a lender or to a title company or an inspector or anything, and they just kind of screwed up, then they're going to always blame you. So you can kiss these referrals goodbye, right? That's one of the reasons that you want to work with people you know and trust. You have to work with lenders, title companies, credit repair, and inspectors, everybody that you know and trust. You don't ever want to refer them. If the client goes out and finds somebody on their own, that's fine. I always tell them, hey, you can go use whoever you want to. I would really think it'd be in your best interest to interview at least talk to the people that I've worked with before, because I know they do a really good job. You can use whoever you want, but at least talk to these and get a second opinion, because I don't know them and I don't know if they're going to treat you right. And that's what it comes down to. So if I want to get referrals, I have to have a good team. And we talked about that in session 1. And these guys that were here tonight, I consider them as part of people that are going to make me look good. You know, it's hard enough to look good to people, but when you have people trying to sabotage you, it's even worse. So we know the sales process is very simple. We have a, one second, I'm coming back here for a second, guys. I have to do something. I have to try to mute you again. Something's going on. Let's do this. I think because more people came on. That's okay. Let me share the screen and we'll come up here. We know that the process is relatively simple. We get our first meeting, we qualify people, we find the home, we submit an offer, and the offer is accepted. That's what we do. In between, there's a lot of follow-up, right? And a lot of follow-up and a lot of things that can happen. The reason there's so many more up at the top than there are at the bottom, because there's always fallout. The more leads you have in the pipeline, the more offers you've written, the more listings you have, the more chances you're going to have of getting paid at the end of the day, because there's always that chance that things are going to fall out. So be careful not to put all your eggs in one basket, and make sure you're using people that are going to tell you the truth when you have an approval. So basic knowledge that we need to have before we get out there and really start working. And we really need to have some basic knowledge of credit repair, mortgage, and title. So Lindsey, I'm going to ask you, can you open up your mic? I don't know if you have the ability to open up your mic. If not, I can do it for you. Let's see here. Lindsey, you should be able to open your mic now.
Okay, yeah. Can you hear me?
I can hear you. I can hear you. I'm going to restart this screen. I want to give you an opportunity to talk about mortgage tonight. Everybody, this is Lindsey Shelton. If you're late to the show, this is Lindsey Shelton with Cornerstone Mortgage. I know that my goal and everybody's goal, no matter what the process is to get them with a trusted lender, right? And the key words are a trusted lender, right? With people you can trust as soon as possible. We need to find out if they can buy, if not, how soon, how much, what is the issue if they can't buy, and is credit repair an option, right? So Harley, we're going to move into your section here in just a moment. I just wanted Lindsey to kind of go over the, this is Lindsey's information here, guys, if you want to copy it down, and it's also going to be in the presentation on the site. But tell us a little bit about what you do, Lindsey, and how you do it, would you?
Yeah, for sure. So, I mean, we speak about this, and I'm sure you've been sharing it a lot with your with the past sessions that y'all have. I mean, the biggest thing really is your referral partners, like you said. So what I love about my side is that, yes, I'm the one probably that they need to go to right after they meet you. So the biggest thing is getting them with the lender, and getting that upfront application done, so you can kind of just see where they stand. Like you said, the biggest thing right now, especially with how the mortgage business is right now and the market, it's craziness. I would say this would probably be one of the most important things, is having a lender that you can trust, that you know is going to be doing a lot of the work up front. So then that way you don't have a lot of the issues that you were kind of speaking about earlier. So did you want me to touch on something specifically right now?
Well, yeah, well, one of the things we've talked a lot about, and I've talked a lot about, when I say they've had to listen to me talk for like 6 days in a row, so it's probably good to have a break, is the benefits of having a fully underwritten approval. Can you talk about how that starts? Because this is what happened. I talk about it, and then some of our people went and talked to their lenders or the lenders they use, and they don't do that. Can you tell us how that came about and what you do and how that works in our best interest?
Of course. So I have heard where other people have said, so-and-so lender doesn't do, the early bird approvals, which is what I call it. I call it early bird approval just because, we all know that saying, the early bird gets the worm. So, and I live by that. So ever since I've been in the business, I've really, really focused as that being like the prime aspect of how I run my business, and which is why a lot of people like to work with me, because having that early bird approval right now is number one. It's always been super important, but with the market how it is right now, let me go back. Early bird approval means that the application's been done, credit's been looked at, documents have been reviewed, verifications have been done. So that way, once you have that approval, and it may not even have to go all the way through underwriting. It could just be, hey, my lender has seen all the documents. This is a good loan. We can move forward. And one of the biggest things about that is just you're almost like a same as cash buyer is what I tell my people. Because when you're up against other people and there's multiple offer scenarios on the table, the agents are looking at those approval letters. So they're looking to see, what has this lender done? Is there any issues that can come up? And 96% of the time, they're calling me too to ask me where we're at in the loan, how everything looks, and things like that. So, I mean, it's the number one piece, to be successful in all aspects, not only to get your loan done, but also have a great experience for the buyer, which is number one. And, having that upfront work does take a couple days, but in my opinion, 3, 4, 5 days And then you get the green light and you start shopping, and you know that that loan's going to close on time and it's going to be done correctly. And the buyer has a great experience ultimately, which is what we all want.
Looks a lot better if you're in multiple offer situations, right? If you're out there and they can call you and if the seller can call you, seller's agent can call you and verify this, you'll have a lot more to stand on if you can stand behind your approvals rather than, well, we really haven't looked at everything, right?
Oh, for sure. And they ask the questions. I mean, I get calls daily with people who are putting in offers, and they're not just saying, oh, how's the loan? I mean, they're asking questions like, oh, I see there's a contingency here. When's the house closing? When's this going to be done? When's this going to be done? So ultimately, you have to be on top of your game, and you know everything. If you've actually looked at the loan and made sure that everything's correct, you already have all that knowledge already ready to go. So, and you know, when they call and you're super confident in what you're saying, I mean, it means the world, and that's how the contracts get accepted.
Awesome. And that's one of the biggest problems we have right now is multiple offers, obviously. So we want to leverage the lender and make sure our lenders are telling us the truth and giving us good approvals. Because I know how many times, I know I do it all the time. I'll call you guys and say, hey, look, we've got a deal that this lender said it could get done, couldn't get done, but can you please look at it and let us know? I had one, and you guys do this for me all the time. You'll look at them and you're like, these guys should never been approved, right? Or we'll do our best to get it to try to save the deal. Do you get that quite often?
I do. A lot of them that I'm seeing here lately is the builder. So a lot of clients are going to the builder. They're doing an application. And I do want to say up front, I'm not meaning anybody in specific, any type of builder specifically. It's just my personal opinion and what I see that comes my way. But a lot of it's right now the builder deals. So
it's just us here. You can say
it's just like, 400 people. It's okay. And a lot of people may understand exactly what I'm talking about. They get under contract with the builder, and then all of a sudden they're 30, 45 days away from closing, and all heck breaks loose. Now this buyer doesn't qualify. It's this, that, the other. So I've been doing a lot of second looks for builders here lately, but also, I mean, it goes the same way for a pre-owned home as well. Yes, it happens often where, these people are going under contract. And I ask myself, did anyone even do a verification of employment? Did anybody even ask a simple question of, hey, are you working 40 hours right now? Because due to COVID, a lot of people are not. So it's just knowing those important questions to ask. I'm seeing that's where a lot of people lack. They're not asking the important questions, and people are just so quick to move and jump on something that they didn't take that time up front to make sure that everything was going to be okay.
And agents are really guilty of calling up the lender and saying, I need a pre-approval, get it. I need it right away. I need this right away. And they get it. And so the lender is under some pressure to pop out a pre-approval, whether it's good or not, with limited information. And that's not a good for anybody, guys. If you're doing that, you should set the right expectations with your client. It's different if we were in a buyer's market, right, where we had lots to choose from, and sellers were having to choose loans that they probably wouldn't always do. But right now they have the power, and there's such a limited inventory. You don't want to just throw out any type of approval out there. That's what's getting us in trouble. The lender is not looking at everything, and then they're going behind the scenes trying to build up a file, and that is not good for anybody. So be patient.
It's chaos.
Be patient. And give the lender 3, 4, or 5 days to get everything done, and set that expectation. Say, we don't want a crappy approval. We want a good approval. We want something that we can that'll actually going to get you to closing and not cause you a lot of trouble. I can't tell you, from a broker's point of view, all day long, I'm getting people calling me because the other side, one side or the other, could not close on time for some reason. The buyers made a promise and they can't hold up to it. It's usually because of the lender or because of the appraisal. It's one of the two, right? It's usually no fault of the principals. It's lender or appraisal, or because the lender didn't order the appraisal on time because they were too busy trying to build up a file. So tell us a little bit about the types of loans that are out there. What I have on the screen is probably a little outdated since the last time we did this, but if you could just kind of tell us how they work and what the best what the best thing going for what you recommend right now for the agents to use.
For sure. So, I mean, at Cornerstone too, we offer everything. We do the FHA loans, USDA, conventional VA, really understanding as like a first time agent or even a seasoned agent, really understanding a little bit of the basics on each of these loans are going to be key for you. Not only for your buyer, but also the experience of the homes that you're looking at. I mean, there's just so many aspects to each of these loans. One thing that I don't see on here too, I mean, obviously they're all going to fall into these 4 categories, but you know, a lot of people are working on down payment assistance loans, any type of an assistance loan. And that's one that, you know, you really got to know your guidelines on those as well, even as an agent, and, you know, partnering up with a good lender will help you with that. So that way you can keep up with all of the different guidelines and the homes and what they qualify for, what they don't qualify for. But yeah, I would say, you know, all 4 are great. VA, USDA, they're going to give you that 0 down program. One that we're offering right now, we actually partnered up with a broker where we created our own assistance type loan. It's not really an assistance loan just because it's 100% financing. So I would say the best one that it would go with is probably VA. So it's 100% financing, so no down payment. But the kicker is that there's no PMI, which is that private mortgage insurance that you have to hold on the loan if you're doing FHA for the life of the loan or conventional for, you know, 10, 12 years or so until it falls off.
Hold on a second. I have to reset my pacemaker. What did you say?
Yeah.
You said you could do 100% with no PMI.
Yes, 100% financing, no PMI. There are, you know, some qualifying things in the background that the buyer has to meet, just like they have to do for any special program. But I guess, you know, the best thing you can do is really understand the different loan programs and what you can offer to your buyer and what is going to make the most sense for them. Because, you know, there's times where it's easy just to fit someone in on an FHA loan. But I mean, if they could go USDA, that would be, where's the home located? Does it qualify for USDA? Is it always best to do a conventional loan? I mean, it really just depends. So having that basic knowledge for each one is really key for sure.
So what is the average credit score that you need? Is this still correct for FHA? Is it a 600 or is it higher now?
Well, so we had a little bit of here and there where we were getting some in-house overlays, but I mean, it's a 580 for an FHA loan. But the biggest thing and misconception that people don't realize is that, yes, we can do a 580, but you also have to have AUS approval, which is our underwriting system. So the answer is a 580, but do we always get an approval at a 580? No, they have to have quite a few compensating factors right now, right. You know, reserves.
What's the magic number that you would love to see if you have at least this number? This is what that makes you know, okay, we can get this done, or we can get
it. I mean, I always like to see a 620. That always seems to be the sweet spot, not only just because, oh, they can qualify for FHA, but that also opens them up to, you know, assistance loans and things like that. So I would say 620 is really the sweet spot, but, you know, we close loans every day that, you know, they may be a little bit lower than that.
So I like to advertise, and we talked about this a little bit about advertising. You know, I like to advertise Craigslist and Facebook Marketplace and things with no money down, you know, see, and then call to see if you qualify, right? Can you tell us a little bit about, besides, I know USDA is obviously a 100%, and you have this other cool program. And tell us how that works. I know there's qualifying factors. Can you just tell us what the bare minimum is if we get somebody on the phone that wants to talk about that, and before we get them to you, they're going to ask for information about it.
I would say just the research on it. There's multiple programs out there. So some of them have income limits. Some of them you can't be a first-time home buyer. You can't have already owned a home. So there's just so many stipulations for each one. But that goes back to having a little bit of that common knowledge. I would say reach out to your lender too, and maybe create some type of little cheat sheet that might be able to help you whenever you're meeting with the buyer. So that way you can help kind of classify them a little bit. That's what I'm seeing with a lot of my agents is before they even come to me, they're like, hey, I was thinking this for them. What do you think? Or, you know, we talked about these 3 programs, but I let the buyer know that ultimately they would need to apply to see which one would be the best fit for them. So I highly recommend doing like a little cheat sheet, but most of them are going to require that 620 credit score. Most of them are going to have income limits. My broker program that we have, there are about 90% of San Antonio is a no income limit, which is mind blowing. So
What?
it's my little unicorn. So,
no income limit. Wow. Well,
yes.
that's great.
It has to be in Bexar County. There are some small pockets, Helotes, some places in Stone Oak that, they have a little bit of an income limit, some parts of St. Hedwig as well. But a lot of times there are some opportunities where even if they may not fit a certain mold for one assistance program, they may be able to fit in another spot.
Okay, now this brings up a question for me, because we have people from all over the state here, and I know you guys have. I know you live in San Antonio and focus in on this, but you can you can do loans anywhere in Texas, right? And you have
Yes,
loan officers everywhere, correct?
Yes.
Is this program, is it pretty much across the state, or just
what I have to, if somebody comes to me with a certain property or something like that, I have to look it up. I know most of Houston, most of San Antonio, there's a lot of no income limits. Austin's a little bit harder right now, because I saw some people asking about Austin. I'd have to do more research, honestly.
Well, but we can find out.
Yeah, no, for sure. And I'm open to helping, anyone find out if maybe their buyer might be able to qualify for such a program. But ultimately, it just depends where it's at.
Great. So we're going to switch gears just a little bit. Lindsey, don't leave, okay? Because now that we talked about talked about credit scores and what we need to do, we need to get the credit guru in here. You do work with Harley, so I know you guys probably want to talk about some of the joint ventures that you guys have done with builders and stuff as well here in just a little while. And then we're going to have a ton of agent questions before we're done. Okay, so please, I thank you guys for hanging out with us. Okay, hey Harley, can you hear me now? Can you hear me? Can you unmute yourself? If not, I will come back and unmute you.
Can you hear me okay?
There you are.
All right, perfect.
Hey, so this is Harley. Let me get to your slide here, sir. This is Harley David Walters, and he is a credit consultant, owner of Texas Custom Credit Repair. I've worked, like I said earlier, I've worked with him from since at least, I would say 2012 and maybe before. And in the beginning, no offense to him at all, I'm always very leery of anyone. Lenders, everybody already said that, because I definitely have trust issues. The only people I really trust have the last name of Tankersley, and they're both my daughters, and I'm kind of iffy on one of them. So but you guys you've never given me reason not to think that I couldn't refer you out, and I've always had really good results. So that's why I wanted to introduce you, but also I know you know your stuff, so I wanted to talk about the ins and outs of credit, right? That's what I wanted to do. I want you to kind of, just like Lindsey, kind of open up, tell us a little about yourself, and we have a few slides here. I'll be glad to work these slides for you as we go through them real quick, and to give us all an understanding of what credit does and what it can do, and what kind of challenges we can overcome. Okay, can you do that for us?
Oh, you got it. Again, my name's Harley Walters. I'm the owner of Texas Custom Credit Repair. So we've been in business a little over 10 years here in San Antonio. We do, of course, the entire state of Texas, which is very beneficial. I've done this for a little over 10 years on the credit repair side. Prior to this, I was a loan officer. I did subprime loans. My specialty was 500 to 620 credit scores. I worked for one of the big banks, and prior to that, I ran the credit card industry from 92 through getting straight into mortgage. So been doing credit since 92, working with American Express, Citibank, you name it. Run about 1,500 people doing credit throughout the industry since 92. So I've been doing this 1 or 2 days with Rick as well. So, but that's our background, a little bit about my background. As far as credit repair, Rick, one of the great things that we have, as he pointed out, we've been in business, like I say, about a little over 10 years. We do have, recently, we just won #1 credit repair here again in San Antonio. We won that our third time. We are nominated again here in 2021. So we'll find out here in the next month or 3 if we're going to win. So that's just a little bit about us as far as a company. Rick, there you go. And then the wonderful Rick Tankersley there, and Carmen Bean. Some of y'all may know Carmen as well. So this is our website. Just a brief
look at that
breakdown.
hair, man. You got to. I need to get me some Just for Men to come back to that hair color.
Well, that's why I'm not on camera right now, Rick. My Just for Men is only working on the sides.
Oh,
so the 90s mullet is coming back. So that's our little shout out to our website there, though, where we've got our reimbursement at closing for credit repair when using one of our preferred realtors. So if you'd like, after the call, you can just go to our website there under the affiliates tab and go ahead and just access that there and ask to become an affiliate. So
can you tell us
Rick,
a little bit about how that
one?
works? Well, can you tell us a little bit how that works real quick, or you have that coming up?
Sure. No, that's an excellent question. So the reimbursement at closing program is a great program. We not only do it on the real estate side, we also do it with Cayenne, Harley Davidson here in San Antonio. So for example, we have clients that go through credit repair, just like joining a gym. Everybody wants to join a gym and wants to be gym ready and looking great or whatever, feel great in a few months. But many of us will join but not follow through, right? So we found over the last 3 to 5 years that we've come up with this great program. We work it with Rick, Carmen, Roush Coleman, quite a few others as well, where if the client starts up credit repair, completes credit repair successfully, at closing, they will actually get reimbursed for their credit repair. It'll be in their contract with us, but generally a turnaround time is about 2 to 4 months. Rick, you can probably go to the next slide and it'll kind of answer some of that right there. Okay. So generally you're going to see we're about a 4 to 6 month turnaround on average. But with that reimbursement program, Rick, I mean, for you, we've seen where we've had realtors go in and we've had them partner up with different lenders, or lenders have different incentives, or like with us, we have builders that you can partner up with and also do maybe like a 50-50 coverage. But again, the best part for the realtor is that you don't have to do a reimbursement for the client until they actually close, which is the carrot at the end, which has increased almost to 25 to 40% success rate with those clients that lag right around that 4 to 7 month timeline we've seen over the last 10 years.
And to tag onto that, the reason I started doing this is so I could have something else to advertise that can help them get free credit repair, right? Basically, because it is free. Once it's said and done, I'll pay for the credit repair, and anybody can do that. I mean, you work with Harley or a good credit repair company who does that, they will. I just reimburse, and it turns out it works out really well. It gives me something separate to advertise. Go ahead, sir. Sorry to interrupt.
No, that's perfect. And again, we do a free credit evaluation for everyone, like it says on the screen here. So everybody, we're going to see if they're even a good fit for credit repair, because a lot of times about 30% of the clients that come to us that think they need credit repair, we can just shoot them straight over to Lindsey because they don't actually need credit repair. Mm-hmm. Yeah, because we can look at it and go, oh, my credit's horrible, Harley. Well, okay, well, actually, you don't have any collections. You haven't had any late payments in the last 3 years, but here's what you've got to do. You've got to pay down that credit card balance of $228 on a $300 limit, and you're going to bounce your score up, or you need to go build credit. There's so many variables. Yeah, and then that's when we can shoot them straight over to Lindsey.
Yeah, because that's why it's important not to really prejudge somebody. And we talk about this in all classes. If they haven't been pre-qualified or they tell us they have a bad credit score or whatever, we still have to go for the appointment and get in front of them to see what the real situation is. Because even people will look at a credit karma or something like that, and they think that they know what their credit score is, and that is not a true credit evaluation. Would you agree, Harley?
That is correct. So, Credit Karma is a good free credit evaluation. And kind of to circle back, somebody was asking about earlier, we're talking about with some of the lenders, one of the things that we've seen with the lenders, with the builders, excuse me, they're only pulling with one credit bureau to look at it. I noticed one of our builders recently was only looking at Experian, and they were saying, oh, this customer should be 30 days out. Well, I'm like, well, as soon as we do a soft pull and we look at all three credit bureaus, which is absolutely important. I saw the other two credit bureaus had a 90 point and 120 point lower credit score. And credit scores are different. People always think, oh, well, the Vantage 3.0 is always going to be higher than Lindsey's FICO score or a mortgage lender's FICO score. That is not true. It is actually, it's varied based upon the algorithms, based upon the biggest variable comes in if there are any late payments within the last 2 to 3 years, and especially medical bills. Medical bills on a Vantage 3.0, which is what Credit Karma uses, it actually has a lower weighting. So for example, with a mortgage lender, we just had a client that had a $15 medical bill. That's correct, 15, $15 medical bill that just hit her credit report in January. It destroyed her FICO score by 55 points. Now on her Vantage 3.0, it's about a 20-point hit, 25-point hit, but it will absolutely destroy their credit score. So there's always a big misconception of people go, oh, well, medical bills don't matter. That's a different concept. It's medical don't impact debt to income ratio, which I'll let Lindsey do her best to explain that. But that's a big misconception. People go, oh, well, Harley, I don't have a lot going on. I just have these 3 medical bills that just hit me. Well, that's why your score dropped 35 to 75 points.
And we've all been told that medical doesn't stop it, which is crazy. I went a little crazy several years ago, and I decided to become a loan officer. And I don't know, I am not cut out for that business, by the way. Thank God we have people like Lindsey that are. But the lender I was working for would not allow us to pull all 3 bureaus until we actually had a contract. Can you imagine only going with a partial approval because all I see is one score, and then having the agent go out and do all this crazy work? That was crazy. And because they all use the mid score, is that correct, Harley? No one uses just one score to evaluate their credit.
Correct. So what will happen traditionally is, for example, a mortgage lender is always going to look at all 3 credit scores to determine what should happen as far as and they'll use the mid score. So it's not an average of the 3. So in other words, if you have a 740, 640, and a 620, then the mid score is the 640. Okay. So again, it is, but let's say, for example, you're going in and trying to buy a vehicle. A lot of lenders will pull at the banks, for example, federal credit unions will look at TransUnion only. Then from there, the big banks like Wells Fargo will look at Experian and only Experian. Then you'll have banks like Bank of America and BB&T that will look at Equifax. So now that's different because those are for individualized loans like car loans or things like that. Versus, again, a lender has to look at all 3 scores to determine credibility, and then 2 of the 3 have to be above goal. So if Lindsey says, hey, Harley, we got to have a 620, just 2 of the 3 have to be above a 620.
Mm-hmm. He said it perfectly.
Awesome. So you don't have you're not going to judge him? Okay. So all right. So
no judging.
We'll move to the next slide here.
This screen, I think, is important. Everybody with credit repair is looking for this miracle letter. And I see it so often. People call us up all the time. Oh, well, I talked to somebody or my friend's doing it and this, that, and the other, and everything's going to get deleted, right? Or you're just going to send a miracle letter and everything gets deleted, right? Because that's what I saw on TikTok. That was the latest thing I saw on TikTok. Everything gets deleted. I cracked up laughing. I said, well, the person on TikTok, did they drive a brand new Lamborghini every day of the week? And it said, I paid $1, ask me how? Because I certainly would. If I could just write a magic letter and everything would just go away, I would have some really nice cars.
Come on, Harley. Don't you have a TikTok channel?
Yeah, not yet, man. I really need to get one.
We should do partners on one. I'll help you with that.
Yeah, I have no dance moves. Maybe that's what it is, man.
I have rock and dance moves. I can teach you.
So the big thing is with this, you know, there are a ton of mistakes on credit reports, and that's why we're in business. You know, over the last 10 years, you'll see sometimes duplications, and items sometimes will get sold from one company to another company. For example, a big one here recently has been Jefferson Capital, for example. They do a lot of repossessions. So what will happen is, for example, we just had one the other day, and it doesn't seem like it's a big deal, but it's a huge deal because, and again, this wouldn't be detected by the lender that would only look at one credit bureau and make a determination. Okay. And so, for example, this item was listed with Equifax twice. What I mean by it being listed twice, the original creditor, GM, I believe, had the balance of $16,500 as a collection and still had a balance with only that credit bureau. And then it had been transferred over to Jefferson Capital, the third-party collection company. It was duplicated with Equifax, so therefore there's $33,000 debt-to-income ratio impact times 5%. Lindsey, what does that do? You know what that, I mean, dollar-wise. Would that impact somebody's qualifications a little?
Say the percentage again one more time.
So it was 33,000 total impact collection-wise for a duplication on there. So times 5%, is that correct?
Oh, for sure, yeah. So we're going to hit them with a 5% payment, and that's going to be a duplicate. So there's going to be two of them, which if somebody really didn't realize what they were doing or wasn't realizing that they're duplicates, you're now telling a buyer who probably does qualify that they don't, you know, just based off of those collections.
Exactly. So, you know, little things like that we'll see on there, that's when things can be deleted. Also, there are items that can be deleted, like a big thing that we're seeing, new trends that we're seeing over the last 5 to 6 months, Charter Communications, AT&T Uverse. And these are your good clients. These are your conventional clients. These are your clients that have 760 credit scores that are dropping down 40 to 70 points because back in 2017, there was a billing merger with those with AT&T Uverse, and people forgot, some of them forgot to return the boxes, and it just hit their credit report in the last 6 months. And their scores just got destroyed, or different variables like that. So this is some of the stuff that we can assist with when it comes into negotiating. And Rick, if you want to go to the next one, what we can do to kind of help out. But that's again, just some of the basics there of what we can do, or what we've seen, some new trends for even some of our better customers. Like I say, better credit score customers, I should say.
And I can definitely agree with that one, because I'm pulling credit on some people and I'm mentioning, you know, these charter collections, and they're like, Lindsey, I have no idea what you're talking about. So it's definitely happening.
It's a billing merger. Charter is a billing merger from Spectrum, Time Warner, also from the 2015 to 2017 range. The other big thing we're seeing is judgments are being filed left and right, because as of August here in Bexar County, at least, they're allowed to file judgments again. So cons is going rampant right now on our clients. The other big trend is people don't understand why credit scores are dropping so drastically from November through January. And the answer is, just like any other major business, we have to write off our losses or look at our collections at the end of the year. So a lot of businesses are doing that right at the beginning of the fourth quarter, and they're sending stuff off to collections. We have seen a little bit of a delay recently with some of having to do a second or even a third letter for verification purposes with some of our collections, because what we've also seen is that items are having to be sold from one collection company over to another or transferred due to them not being able to handle the call volume. I personally assist our clients with doing settlement offers. I've done some amazing settlement offers recently. I just did a USAA credit card, 12,000 balance for 1,200. It was 10% of the amount owed. I just did a $16,000 repo for 25% a one-time pay. Just doing some amazing settlement offers out there right now. Clients are they're happy when we call them up. Speedy Cash is a big one. Speedy Cash, we can actually get that deleted if they pay back what they borrowed, which a lot of times is a third of what's listed on their credit report. Yeah. So, you know, again, just kind of get back to the slides. These are things that we can do to kind of, yes, sir.
Just to what you guys were talking about a minute ago about people who have those charter and UVerse things on their credit and they don't even realize it. That's just be careful as an agent. This tells me that even if they think they have great credit and they tell you, I will get qualified once we find the house. I don't know if you've heard that, but I've heard that many times. I don't want to get pre-approved. I don't want to pull my credit until we find the house we're looking for. And they say, I know my credit's great. I don't have a problem with it. And that might be true. However, there might be things on there they had no idea would pop up, and then you're behind the 8 ball instead of in front of it.
Yep. Yep. So, and it's really important, I think, to have them monitored all the way through, because we've had to play super heroes here recently at the company, trying to save a lot of people at the last minute with especially builds. Builders are having to call us up at the last minute saying, hey, we were 3 to 6 weeks out from closing, never had an issue with this client. There's a judgment that just popped up. Can you help us, Harley? And we'll jump on with the attorneys, by the way, and release judgment. One of the biggest judgments that are being filed right now as well is Portfolio Recovery Associates. They do for Capital One. They do a lot of the credit cards, Credit One. They use 2 different attorneys here in Texas. They use Roush Stern, and they also use Michael J. Scott. It's great to make friends and have a name like Harley that everybody remembers, right? So we've established rapport with these different companies, and I have direct point of contacts to streamline the process as well. So again, Rick's has given a little basic example for cars, you know, how on just a Toyota Camry, our clients are used to paying for the Camry, but they're used to paying Lexus prices for it, meaning they're paying $34,000 for a $23,000 vehicle that I'm going to go pick up for $24,000 because I have better credit than the average person out there. Next slide, Rick. The big thing you guys are here for, you don't care about cars, you don't care about anything else. Lindsey, this is something Lindsey and I worked together on earlier. Let's say, for example, your client's purchasing a $200,000 home with a 30-year fixed FHA at 2.625% interest. Your principal and interest payment only is going to be $775.19. Rick, next slide.
Hey, real quick before we move on, Harley,
yes,
can we get Lindsey to explain for some of the newer agents here what that means, principal and interest, to compare to the actual payment?
Yes, sir. Definitely, please.
So the principal and interest is only just the loan. So it doesn't include your escrow, which is your property taxes and your homeowner's insurance. So that the easiest way to kind of compare different interest rates and things like that is to kind of take out the escrow, just so you can really see, okay, the loan is costing X amount. So that's what he's going over, is we're only talking about principal and interest only, because every home's going to be different, and the price and payment will be different depending on the home and the taxes and all that good stuff. So Harley, I love that you're using principal and interest only, because it really shows what, you know what I mean, that true savings is going to be just with having a better credit score, or waiting, you know, an extra little bit of time so that you're not overpaying, especially people who are super payment conscious. This means the world to them.
I have a friend who's tax exempt, and I'm so jealous of his credit, his payment right now, because he has a very close to principal and interest because he doesn't have to pay taxes. So that's an amazing time. I just want to make sure that people weren't calling you trying to get a 775.
Yeah,
payment.
I mean, the escrow is going to be, you know, quite a bit more. You got your PMI, depending on the loan program. You got your taxes, your homeowner's insurance. But really, when you're, you know, comparing loan products and things like that, that principal and interest is key.
Right. All right. Okay. Thank you for that quick explanation. We'll move on.
Yeah.
There you go.
Sure, and that example of the two different credits or the two different interest rates that we're giving here, the 2.625 versus the 3.5, is driven on a current example of the 620 score versus a 720 credit score, right? So obviously, better credit score is going to help out there as well. So with a 30-year, they're looking at paying almost $33,000 more for the exact same home, which of course that monthly payment increases to a little over $865, as you can see there. So huge savings on, you know, buying a $200,000 home. Of course, you know, do the math as you kind of go upward there. So next slide, if you can. And here's the biggest thing, and I won't go into too much detail on this, but the biggest thing is credit score breakdown. This 35% of the score is driven from your payment history. And I posted something earlier today that a lot of people aren't aware of. Since April, the credit card companies have been reducing their risk, and people that have not been utilizing or using their credit cards on a monthly basis or haven't used them in quite some time, even if you have an excellent 760 plus credit score, if you're not using that credit card, they're cutting your credit card and they're not using it, or they're closing out your line of credit. Even if you have a balance on there and you're making payments and you're not swiping it every now and then, a lot of them are canceling our clients. And we're seeing people's credit scores drop. So a quick way to easily build your credit is payment history. That's 35% of your score. So payment history, let's do something real simple. In my household, my wife and I, we have a total of 5 credit cards. I have 3, she has 2. So I made her an authorized user on my cards and vice versa. So what we do is that gives us an extra 5 payments every single month, an extra 60 payments a year. So the way payment history is driven is they take the total number of on-time payments and divide it by the late payments. So let's say, for example, I only have my mortgage payment and that's it because I don't have any car payments. Let's say I had 1 late payment out of 12. Well, that's a huge impact. But I throw those extra 5 in there. Now we've got a total of 72 payments this year that can be made on time. 1 out of 72, not good, but certainly not as bad. So payment history, just utilizing and sometimes making your spouse or someone in your household an authorized user on a credit card that has never had late payment history, has low utilization, which we're going to talk about here in a second, utilization, which is 30% of your score. That will instantly boost a lot of clients' credit. But realtors, beware. I've had phone calls recently after the last training we did in December, Rick. I had phone calls from before your call. I was telling everybody just go out and go apply for a credit card and just go get a credit card. A client's credit dropped over 140 points because they went out and started applying for credit. Okay, so
that's because they broke the
beware.
cardinal rule, man. If you tell people to use a professional, right? If FSBO should use you, you don't be trying to be a credit repair person. You're going to screw them over, right? And they never say, "Oh my word," like you said. They say, "Oh crap," or worse, right? So you just, bad problem happens. So yeah, use a professional.
Yeah, or we'll give them a Texas term, bless their heart. But and when I went in and followed up and met with that exact client that we're given the example of that dropped 140, if he would have just been simply added to his wife's credit cards that she already had for over 5 years and had never been late, he wouldn't even have had to have applied for credit, which is 10% of his credit score, by applying for new credit. And it also, as you can see, Rick, their length of credit history is 15% of your score. So what people don't realize, they think the inquiry kills them. No, it's getting approved for new lines of credit also, which is 15% of your score, that length of credit history, because you now have a new line of credit. So you've now shortened your overall length of credit history. So the big mistake a lot of people also do is secured credit cards. And this is our biggest clientele group, okay? So what happens with secured credit cards, secured credit card is where you take money out of your own pocket, go up to the bank and say, hey, hold this $300 or $500 for the next year or 3 years, and I'm going to borrow against this $300, and you're going to give me a credit card. Well, people think it's the same thing as a debit card. It is not. So what happens is they'll go spend all $300 and max out their utilization, which is 30% of your credit score, and they'll drop their credit score anywhere from 30 upwards to 75 points. So utilization is simply your credit balance divided by your credit limit, okay? Or your limit divided by your balance, I should say. So what they do is they simply look at it and say, okay, you have a $150 balance, you have a $300 limit, you're at 50% utilization, you're a C rating, your score is dropped. Every 20%, your score will drop of your credit limit. So in other words, as soon as a $300 credit card hits $60, your score will drop. As soon as it hits 120, it drops again. If it goes over the $300 limit, it is going to drop. I've seen as much as 50 upwards of 95 points for going simply $5 over on a $300 credit card. It's not about how much you owe, it's the percentage of utilization. Lindsey, you want to reinforce or say anything on that credit score model?
I mean, everything you're saying is completely right. I'd be calling you out if it wasn't. You know I love you.
Oh, I know. No, trust me, we keep each other in check, right? Yeah.
I know.
Well, the
right?
industry changes. Yeah, the industry changes so much, and I think that's why it's so important. I saw someone earlier kind of post in a question, you know, why don't they change the model? Well, there's 80 different scoring models. People always go, well, I have a FICO scoring. There's 8 different FICO scoring models. So again, it's not all the same. So the biggest thing with credit repair is just going after the inaccuracies, and more important, if a client does have some items circling back to Charter Communications and they owe $800 because they didn't return the 3 boxes that are sitting in the garage still or in the closet, return the boxes. I tell them all the time, give me the UPS label. Send it to me. Then we'll jump on the phones with diversified consultants. Let's do a payment. Let's get a deletion, and let's get it in writing before you give them money to get that removed. Because people always go, like Rick said, well, I'm just going to do this myself. Well, I'm sure you can cut your own hair, but how good will you look on the Zoom call, right? So just one of the little things. Rick, if you want to go to the next one.
Okay. No. Yes.
So here's an example of a client I just pulled credit on today. They started our program on the 23rd of July. We pull credit. We prefer to pull credit on the 10th of every month. And this is a Vantage 3.0 score. We do have a FICO scoring model. We do offer both. This just happens to be a Vantage 3.0 client. They started off, as you can see, as upward, kind of started off in the 600, right around, you see them take also a dip in December. I purposely put this client in here because this is a client that had exactly what I said happened. Charter Communications hit them. As you see, they went from a 630 all the way to a 560, a 658 to a 596. We got them back up again this month, as of this morning, to a 688, 686, 649. But this is a prime example of a client that did the Christmas, oh, well, I'm sorry, Harley, I just went a little bit up on my utilization. Don't know why my score dipped to 19% or lower. And guess what? We're back where we need to be this month. And we had to do a settlement for deletion in December for Charter Communications. That's why the score's back up.
So the question I have, this is a Lindsey question. How soon, when you're about to close, do you pull credit again?
So if it's a builder deal, I'm pulling credit 60 days prior. And that's just because we want to make sure that if there is any more work that needs to be done, we have a nice time frame in between. If you're looking at pre-owned, I'm not repulling credit because at that point, the buyer's already ready to go and they're closing within, let's say 30, 45 days at the latest. The only thing that might be happening is what's called a refreshed credit pull, where they're not actually pulling the credit scores, but they're looking to see if the buyer has opened any new debts.
Right.
So,
I have seen some lenders that pull the credit right before closing. And if this happens, guys, boom, you got to be careful.
That's scary.
It is scary.
Yeah, for
So I'm
sure.
glad I'm glad to know you guys don't pull credit until, actually pull credit before closing. That's a good thing.
Yeah. Yes, for
Can I
sure.
ask a question?
And yes,
Okay, so all right, you make some purchases on your unsecured card, and then when do the creditors report to the 3 credit bureaus?
that's an excellent question. It varies by creditor, and it varies by credit bureau. And it
I'm
changes
trying to, because
monthly.
I want to make a payment and get it below the 19% utilization, correct? Before they report.
The goal is to never go above 19%.
Okay.
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 To clarify, you
you.
never exceed 19%. It's in our contract with our clients. They are required to never exceed 19% while they're in our program. If so, our contract is null and void. So if they hit a $60 balance on a $300 credit card, we're calling them up and we're all over them every single month. Each of these little timelines, we pull credit on the 10th of every month. To answer your question, the best time of the month we changed about 3 to 5 years ago, pulling credit. We used to pull credit on the first Tuesday of every month, and it was a good rule of thumb, but we found Capital One pulls more consistently and reports on the 10th of every month. And that's where most of our customers are Capital One users. So tomorrow we're going to be pulling credit for over 370 plus clients and providing updates, as you saw, to the clients as well as to our business partners through our portal. Let them know exactly what to do.
So one of the main reasons I wanted these guys on here, just so you kind of fill in the blanks of the stuff I've talked about, and I've moved to the next screen here, Harley, as soon as I'm done. I just want to explain that when I talked about the 131 file, I always had a separate one for my credit repair people, because if somebody needed credit repair, I was not going to throw them out the baby with the bathwater. Like I said, if someone who needs credit repair, they have family, they have friends, they have people who are in their sphere of influence that they can refer me to if I'm helping them. If I would not blow them off, and I will put them in a program. I introduce them to Harley. I create a 131 lead sheet for them. I put it in my file, and I call them back once a week to see how things are going. It only takes me 2 or 3 minutes, and then at the end of every conversation, I ask them if they know anybody who's looking to buy or sell, to keep looking for me, because while I'm trying to get you a house, I'm unemployed. So if you could help me out while Harley and Texas Custom Credit Repair and Lindsey are working on your file, then refer me. And then by the time they actually do, because I'm motivating them and keeping them going, and then they actually refer people to me either during or after they buy a house, and they're so happy and they love me so much by the time it's over with that their whole family loves me. I've had mothers and fathers come to closing and cry and tell me how thankful they were that I helped them when nobody else would. And it wasn't just me, it was the team of people I work with, but I didn't say, well, you weren't qualified, so you're not worthy of my time. So you want to make sure that when you work with somebody, you know that their credit's not that great. You get them with a lender, and then you say, okay, we're going to take a while. So the lender says, we can't do this on our own. We need a credit repair. Put them in a good follow-up system, and just follow up once they're in credit repair to make sure they stick with it, because that's the main thing. People will start, because unfortunately, Harley, you can speak to this. Some people have bad credit just because of mishaps or because they've they had something hit their credit, but by and large, people have bad credit because they're just never learned the responsibility or how to handle their finances. Would you agree with that?
Oh, definitely. Yeah. I mean, some people just go through some challenging situations, especially over the last year. And a lot of people are bouncing back. And I think that's the most important thing that we've been told that's different about us is we give realistic goals. And I asked somebody right up front when interviewing them, is this something that you're going to be able to accomplish, and when is your goal? Meaning, if you have to make some settlements, and it's always, the biggest thing is when we tell somebody, oh, you've got to pay down this $3,000 balance on this credit card, to be able to maximize your utilization. Well, then I break it down for them and go, you know what? That's only $600 a month for the next 5 months. Oh man, I didn't think about it that way, Harley. Oh yeah, and if you just go into our software, you can look in here and start a budgeting tool, because I'm sure you're spending extra money at Fiesta, Texas, or Bill Miller's or Whataburger, that you can save some money on and put towards, that. And just, I think, really laying out a plan and helping people and providing that discipline and providing that monthly feedback to them is really the biggest thing, because a lot of these people, just like everybody else, get discouraged. And especially after you've been working so hard and you're almost at the end of your goal, and then something new pops up like Charter Communications or a $15 medical bill that dropped you 55 points. So to circle back, Rick, the best way to schedule an appointment right here is, guys, you can send us leads if you want. We're happy to accept them. You can enter them into the system. But just go to our website at Texas Custom Credit Repair. Click on the New Client tab. Schedule the appointment. My live calendar's on there. I meet with close to 70 new families every week. Okay, so we have plenty of times available Monday through Saturday available for you. We'll do a free evaluation for every single one of them. Just make sure if you schedule that you put in your referred by name, and in the notes section, understand that the clients can see your notes. So we had somebody put in there, client is very difficult, and they said a lot of other things about the client. And the lady saw the text message, and I said, "Oh no, ma'am. He said very difficult to reach. So make sure that you reach her at this number." You didn't see the rest of the message.
So he didn't say
So
this effing guy never listens, right?
No, sir. So real easy right there, Rick. They can just click on that and go to the next one there.
Well, that's awesome, man. And I know this is great information. We're going to open up to questions here in a few minutes, everybody. Lindsey, you're still there, right?
Yes, I'm here.
Do me a favor and talk to us a little bit about, and I know it can be kind of generic terms, but the value of working with a lender who will co-brand with you, and the value, what you can do to co-brand and help marketing and things like that with the right.
So I might be a little biased, but Cornerstone has an amazing marketing team. So, the best thing is that you don't have to pay for it. I mean, that's huge especially if you're first starting out, or you don't have a lot of funds set to the side for things like that for your new clients, but you want to look good. You like, I always say the pretty stuff, because I think as an ex-teacher, I just love pretty stuff. So, and the buyers like to see it too, because it makes them feel important as well. But we have an amazing marketing team. So anything that you want, or if you have an idea about, we can co-brand it. I can make open house flyers. I mean, there's lots of things, that we can definitely offer you guys, and the marketing team is amazing. So, I mean, take advantage of it fully. But there's a lot of times I have that co-branding, flyers, things like that.
And I am guilty of one that takes advantage. I mean, I don't want to sound like I'm, a bad sense, but if they offer, I'm going to call them all the time and utilize the team and lean on the team that I'm working with, right? We're trying to get business together, right? And they have know-how and resources that maybe I don't have as an agent. So I want to utilize those resources. Just like you said, a marketing department, they're willing to spend some money on me, and on my marketing, because they might get business. That's fantastic. So always utilize your lenders and talk to them. And Lindsey, I know that you may not be able to help everybody, but you can refer them if you need to refer somebody, if they want to meet somebody in their town or in the area, you can actually do that as well.
Yeah, I mean, if you're in a different city, or you just want maybe somebody a little bit more local, I mean, reach out to me. I can tell you who I think would be a great fit for you. I mean, we can all do the same things ultimately. So, there's someone for everyone here. And
Harley, you can pretty much do everything virtually, correct?
Correct. Yes, we can do everything virtual. All right. Well, and we'd love to do any type of home buyer seminars as well. We will be doing our first virtual one in 2 weeks as well. And then when everything gets back out to normal, we'd love to help you guys do home buyer seminars in person as well throughout Texas.
If you get with me sometime next week, I will do my best to try to work to set one up as well. We'll set one up to try to get as many people involved as we can.